You must have heard of stocks that gave investors 200, 300 or even 900% returns in a short amount of time, and some of them even cross thousands when it comes to percentages. So what are these stocks known as? These stocks are called multibagger stocks. So what exactly is a multibagger stock and how can you spot one? First used by famous investor Peter Lynch in his book One Up on Wall Street, multibagger stocks are basically those stocks that give multifold returns on the investment. Now a stock that doubles its price is called two-bagger, and if the price grows 10 times, it would be called a 10-bagger stock. Similarly, a stock giving multiple returns is known as multibagger. Now any stock that gives over 100% or more returns in a short amount of time can be classified as a multibagger stock. These stocks are issued by companies having tremendous growth potential. If we take some examples, Apollo Pipes was a penny stock at 4.83 rupees in 2013. Now in 2023, this stock is trading over 540 rupees. That means the stock grew about a whopping 11,000% in 10 years. Another example is Praveg. This company grew over 4,829% in just 3 years. Now, there are some ways to identify these multibagger stocks as well. For example, you can keep an eye on stocks that are undervalued, debt on the books, PE ratio, or different industries that are growing exponentially. Now let's understand this in depth. The first thing you need to check is debt to equity ratio. There are no defined levels per se for debt, as it will vary from industry to industry. However, as a ballpark measure, debt should not be more than 30% of the equity value. Number 2 is previous quarter performances. Keep a check on the company's revenue multiples on a quarter-on-quarter basis. If the multiples are low but the company is performing at the operational level, then that can be a hint that the company has significant upside potential. Number 3 is sources of earnings. Along with the revenue numbers, check the sources from which the company is making money. Is the primary revenue segment set to grow at the macro level? Are the operations of the company easily scalable? If yes, then the stock may have the potential to be a multibagger. Number 4 is earnings and price multiples. Calculate the trailing 12-month EPS and revenue to arrive at the current PE and the price sales ratio. If the PE level is growing faster than the stock price, then its chances of being a multibagger are bright. Lastly, check out the business model, capex or management changes. Be on the lookout for any major changes in the quarterly results or annual reports that could have significant impact on the company's operations. Lastly, multibaggers are generally issued by companies that are just launching in the market, so the level of risk in these stocks is pretty high. Hence, you need a lot of patience and research to choose these stocks.